Ladies and gentlemen, good day and welcome to Relaxo Footwear Limited Q4FY23 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prerna Jhunjhunwala from Elara Securities Private Limited. Thank you, and over to you.
Good evening, everyone. On behalf of Elara Securities India Private Limited, I would like to welcome you all to 4Q and full year FY23 post-result conference call of Relaxo Footwear Limited. Today we have with us the senior management of the company, including Mr. Ramesh Kumar Dua, the Managing Director, Mr. Gaurav Dua, Whole-Time Director, Mr. Ritesh Dua, Executive Vice President Finance, Mr. Sushil Batra, Chief Financial Officer, and Mr. Ankit Jain, Company Secretary. Without taking any further time, I would now like to hand over the call to Mr. Sushil Batra, and over to you, sir. Thank you.
Thank you, Prerna. Good afternoon, ladies and gentlemen. Thank you for joining us on this earnings call for the quarter and fiscal year ended 31st March 2023. The earnings press release and the investor presentation have been uploaded on the stock exchanges as well as at our website, and we hope you have had the chance to go through these. Before we begin the question and answer, I will quickly go through the Q4 and FY23 performance, starting with Q4. In Q4 FY23, we recorded a revenue of Rs 765 crore as against Rs 698 crore in Q4 FY22, recording a growth of 10% year-on-year. On a Q-on-Q basis, the revenue increased by 12%. This is mainly due to volume growth across all categories. Our Q4 FY23 EBITDA was at Rs 118 crore, up by 6% year-on-year from Rs 111 crore in the corresponding quarter of previous year. EBITDA margins were at 15.4% in Q4 FY23 as against 15.9% in the corresponding quarter. On a Q-on-Q basis, EBITDA margins have grown substantially by 481 basis points due to selling of low-cost inventory along with costly old inventory. PAT was at Rs 63 crore. On a sequential basis, PAT grew by 110% from Rs 30 crore in Q3 FY23. PAT margin for Q4 FY23 was 8.3%. Our price correction efforts during the last quarter have resulted in a good momentum, and we have continued our market share recovery in all major segments during this quarter without relying much on discount and offers. Now moving on to full year FY23, despite the challenging environment last year, our strong team responded effectively, and our commitment to maintaining our high standard of excellence have made us successful. Revenue for FY23 was at Rs 2,783 crore, up by 5% year-on-year from Rs 2,653 crore in FY22. EBITDA was at Rs 336 crore as against Rs 416 crore in FY22. EBITDA margin was at 12.1% as against 15.7% in FY22. Margins were affected primarily by the high pressure on raw material prices during most of the year. PAT was at Rs 150 crore in FY23. We are now a debt-free company with robust cash flow operation due to our strong working capital management. During the year, the company incurred a capex of Rs 174 crores. With the stabilization of raw material prices in Q4, we are currently experiencing strong demand and hold an optimistic view of the future. Our company is strategically positioned to take advantage of the opportunities within the industry, allowing us to further expand our market share. Our key strengths lie in our in-house manufacturing capabilities, quality of our product, and the strong recall of our brand. We remain dedicated to upholding these strengths and will persistently strive to maintain their integrity. We have confidence that our continued efforts will yield positive outcome for us in the times ahead. Thank you. Now we can open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Ali Sagar Shakir from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations to finally seeing a good market share trend, in your company. I have three questions. First is on the, current quarter. I understand from our channel checks that, post the cleanup of the old inventory, market demand has picked up quite strongly, and in fact, Relaxo has not been able to, meet all the distributor demand. So is this true in multiple geographies, and do you think we would have lost any revenue because of that factor? If you could just quantify, what could have been the impact of that in this quarter, and has that been now subsided, or we are still seeing demand not being able to fully met?
Yeah, this is Gaurav Chua. What you said is partly correct, that there is an upsurge in demand, and we are seeing it. One reason is that we have corrected the prices, and second, this is a peak season for us for open footwear. As we are 75% open and 25% closed, so this is the open footwear starting from January to June to July. So, and regarding the shortages, we are managing, we have inventory with us, and the uptake we are seeing across India for the open footwear.
Got it. So, can you quantify if you would have lost any revenue because of that in this quarter, and has that been now subsided?
It happened in February because there were some IT issues which has been corrected, and now we are able to cover. We have the inventory, sufficient inventory.
Okay, got it. Second question is on your margins. So while we have significantly reduced prices, we have seen impact on margins. So can you share, what is the trend we should expect in the coming quarters as raw material prices are also softening? So should we see that helping us, and therefore the impact on margin that we saw in this quarter should improve? How should we see that?
I'm Ramesh Kumar Dua. Market remains challenging, and we have to be very cautious with respect to our pricing of our article, so that we always have a good market share as far as sales are concerned. The EBITDA margin that you have seen in this quarter is likely to continue, and there has likely to be some improvement also.
Got it. Thank you, sir. This is very helpful. On the gross margin also, should we see improvement because of the raw material price softening?
Some improvement, yes.
Understood. And just last question on the closed footwear in the sportswear category. I understand that we have made a lot of changes in our design team, online team. If you could share some, thoughts in terms of, what is the strategy in the sportswear in terms of the new product development and, what is the aim in the next 3-4 years? Can we expect to, reach about 1,000 crores in 3-4 years' time? I mean, if you can just share what is the strategy there.
So, if you talk about Sparx sports shoes, we have grown heavily. We have done roughly around 25% growth. And before that, last year we put up a plant to cater to this need. So still, the plant capacity still we have. It will take 2 to 3 years to, reach to that level. And you're talking about 1,000 crore. Sparx is already 1,000+ crore brand.
Yeah, but sportswear would be relatively lower, or of course, Sparx is much bigger, but within that sportswear, if you could just quantify how much would that be?
So that is roughly around, we do sports shoe and all sports category, roughly around 400 crores. So definitely we have aspiration to become 1,000 crore in, it will take 2 years, 3 years, time will tell.
Understood. This is very helpful, sir. Thank you so much.
Thank you. Next question comes from the line of Vikas Jain from Equarius. Please go ahead.
Thank you, sir. Thank you so much for the opportunity. For the first question, definitely we have seen a market share which you have regained from which were lost to earlier competitors. So, at this point of time, can you easily say that we have regained almost all of the market share, or some part of it is still left?
Can you repeat the question? It's not so clear.
So I was mentioning about the market share. So have we regained the entire market share and reached to what we were at the pre-COVID times, or probably some part of it is still more left to gain?
Yes, definitely. What we have lost market share in last Q1 or Q2 last year, we are seeing a good momentum now, and we are gaining the market share back. So definitely we will recover. We have recovered, now we'll recover more.
Sure. Okay. And so second question with respect to the demand, well, Ramesh sir did mention that the demand environment continues to remain challenging. Probably, is it like how would you, some comments with respect to how is the underlying market growing, and what do you think it will take for the market to normalize, in what time period, according to your estimates?
So actually what we are hearing from the market, that this Eid and this festive, there is a demand contraction happening in some parts of India, Rural India is still not able to cover up what it was contributing. But I think this is a temporary phenomenon. The inflation is now getting controlled, and we'll definitely see the uptake in coming quarters.
Understood. And so with respect to last, again, with respect to penetration in South India, so how can you broadly break our revenues across on a geographic basis? What is the contribution from the all four, North, West, East, and South regions?
So North contribute maximum to around 44%, followed by East 22, 20 is West, and 15% is South. And we are maintaining this from last year. It is similar.
Sure. And with respect to more distributors adding in the South, is that on track, or how many have you added this year probably?
So see, it's not a great achievement in adding more distributors. We have maintained what we were having. So always there will be a churn, new addition, and some people leaving. So it's roughly around same.
Okay. So thank you so much for the offer.
Thank you. Next question comes from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah. Good afternoon, sir. Thanks for giving the opportunity. So my question is on the price cut what we had taken. So we had taken the price cut to reduce the pricing gap between the lower price, the products which are organized and lower price point products. But since you said that raw material prices have corrected, have we seen any price reduction undertaken by those bottom of the pyramid players or lower price point players in the market, and because of which again the pricing difference what you were planning to reduce, it has again gone up? Any sense on that?
No, now our prices are very competitive, and there is no room for further price cut. And even our competition, while we are very competitive, there is no issue. I don't think there's any room the competition can do much about it.
Okay. So you don't see any further price cuts happening in the market, right?
No, not so.
Okay. And so my second question, you have been consistently talking about expanding your capacities. So any guidance for capex going ahead, and where you are planning to add capacity?
No, but last year the whatever capacity we wanted to expand, that has been expanded.
Okay. So there is no going to be any.
This year only money is going on molds, which are regular kinds of things, some repairs, molds, and backward integration, some capital asset generation. That's it.
Okay. Any thoughts on your retail expansion front? By FY23, how much was your reach, and where you want to take it over the next 2 years?
So earlier we were maintaining around 400. Now We are expanding this year.
Can you provide some numbers?
No, earlier we are having 400 outlets. Now we are planning to have 465 this year. 65 more addition.
Okay. Fine. Thanks.
Thank you. Next question comes from the line of Onkar Gugardare from Shree Investments. Please go ahead.
Yeah, my question was regarding, it's from your investor presentation. So from FY21 to FY23, the average realization has gone up, but the number of pairs sold has decreased. So, and in this quarter, the average realization has gone down significantly, but the number of pairs sold has increased dramatically. So, like, what's the management's view on this going forward? What could be the average cost of pair, or like how it is supposed to be in the future?
Last year we had done major correction in some of our categories like Hawaii, Eva. So that was the reason that now average selling price has gone down. And our volume has gone up. So that is why volume is going up, but the average rate has gone down only because of reduction in prices.
So from here on, what we can expect? A stabilization here, or like
stabilization? By and large, stabilization.
Okay, you don't see any upside from here on.
On the whole year side, because in this quarter, mostly open footwear was in demand. Closed footwear comes in a winter session. So overall in the year, again you will see our last year average price of 160 will be back.
Okay, so for the current financial year, you are expecting around 160 rupees per pair realization.
Could be a little high also, depending upon the shoe season does little better, then things will be further. But around 160, 165 we can expect average.
Okay, and what about the number of pairs? I mean, what could be the ballpark estimate for that?
Definitely, from the last year, we are expecting double-digit growth in volume for this year.
Okay, so around double-digit volume growth and around similar kind of average realization per pair, or somewhat higher.
Yeah.
Okay. As far as the ROE and ROC is concerned, what's your plan on next 2-3 years, since it has come down dramatically again from FY21 to FY23?
Definitely it will improve in coming years because last year was a tough year, profits were under pressure and we did capex also. So next year definitely it will be much better than this FY23. We can, I think, match with FY22 if it goes well.
Yeah, because it has now come down to a single digit now. That's what I'm asking.
Definitely it should be at least between 15 to 20%. That is the intent, and if things are well, so definitely we will achieve that.
Okay. As far as the demand outlook is concerned, how are you seeing currently it is shaping up?
So currently there is a little challenge in the market. There is little demand contraction, but I think going forward, Q2, Q3 onwards will be better.
Okay. In the current quarter, you are facing some demand issues.
Yeah, because what we're hearing from the market that still rural is not back on track. It's going to take little time.
Okay. Any update on what could be the export percentage, and how is there any opportunity for Relaxo, or like the home market is so large that you are not even bothered to think about the export market?
I'm Ritesh over this side. Exports we have done around 4.5% of total revenue. And the way we are growing last 2-3 years time, we're getting double-digit growth, and we are in future also we are expecting the same growth will sustain.
Okay, the margins over there are better than the home market, or like how it is?
It will like similar.
Similar. And which are the major countries you are exporting to?
We are exporting to all these like regions we are growing, like Gulf Oceania region or even Africa. Even Central America has now showing back on track because during COVID time that was badly affected. So that also is growing now. So all markets are growing.
Okay. All right. Thank you.
Thank you. Next question comes from the line of Ankit Kedia from Phillip Capital.
Sir, 11% realization drop YOY and quarter-on-quarter. How much is due to price cut and how much is due to mix change or new, you introduced 105 rupee chappals also in the market, last quarter. So can you give us that impact of mix versus price cut?
The lowest price article that you're talking, that is very minimal. It has no any significance. It is just entry beggar kind of an article. But otherwise, whatever price cut we could do on account of fall in our raw material prices, that we have done, and that's it. No more price cut. We are competitive and optimistic. Things are growing. We are getting our market share back.
And so in this 11% realization drop, can you quantify how much is due to mix and how much is due to price cut?
Very complicated. We have 400 articles, different pricing, different material consumption. So this is very difficult to quantify because article-wise things are different.
So is it fair to assume that the price cut in open footwear could be higher than the price cut in closed footwear if you have to take on blended basis?
Yeah. Because more polymers are required in open footwear, not the EVA and our Hawaii slippers. But in sports shoe, upper is a different material, upper, bottom is different material. So you are right. In case of sports shoe, price cut was not there. It was almost same.
Understood. So the reading is the 75% open footwear, we would have taken a double-digit price cut, while in closed footwear, which is around 25-30% of our business, we would have not tinkered with the prices much.
Oh, no, not much.
Understood. So my second question is regarding promotions. We have seen high promotional activity in the quarter in the market. Your competitors also in the month of January, February, March were very active by giving higher dealer commissions and even retailer commissions. So could you please elaborate, how was our promotion activity in the quarter, and going forward, how are you looking at your A&P spend?
If we maintain the A&SP spend, in terms of schemes, we always we have depends category to category. Hawaii we have different types of schemes. In shoe division we have different types of schemes. So seeing the demand, seeing the market scenario, seeing the pricing, we decide what kind of scheme we have to run. And even seeing the competition also. So we don't benchmark exactly. We see what is our need, and then we float the scheme. So we do not exceed, if competition is giving more, let's give more. We have to analyze other situations also.
Sure. And what is the A&P target for next year, and how much is it for this year, if you can quantify?
So, if you talk about A&SP, we do around 8 to 9%, and we are maintaining this from last 2-3 years, and we'll try to maintain similar pattern in this coming year also.
Understood.
So this includes advertisement also, A&SP advertisement and promotion.
And how much would be pure advertising?
Roughly around 4.5-4%.
Understood, sir. And sir, if you can just share, one of your competitors in, sports shoes is going very aggressive in EBOs. While if I look at your EBO count for last 4 years, has been pretty much flat at, 390 odd EBOs. Why haven't you expanded EBOs in last 4 years? What is, the risk you see in EBO expansion, which has, while COVID years were also there in 2 years, but still the expansion has not been compared to the market, where we are seeing competitors expand EBOs. So if you can just talk a bit on that.
No, you're right that the last 2 years we didn't expand, We wanted to make it a little more efficient because we have to control our bottom line also. And our article 75% open footwear, 25% sports shoe. The competition you are comparing with their only shoe outlets. So keeping in view a balance, so and the strategy of our retail showroom is to showcase our products. Share of our retail outlet in the total scheme of things is around 8%.
Right. And is it fair to assume the margins in EBOs would be just near double digit and lower than the company average?
Yes, it's lower than company average, but I think the high single digit margins we are earning in the category.
Understood, sir. Thank you so much and all the best, sir.
Thank you. Next question comes from the line of Manish Poddar from Motilal Oswal AMC. Please go ahead.
Yeah, thanks for doing the call. So currently 3 questions. One is, can you help me with primary and secondary numbers for this quarter?
Can you repeat again? Can't hear you.
Primary and secondary numbers, because you are saying that Q1 is still soft, but your volume numbers, when I look at it, 5.2 versus 4.2 of last year or 4.1 of this quarter, last quarter, they seem to be doing decent. So I'm just trying to understand what am I missing.
I think it's a volume growth. You are referring the number which you mentioned in investor presentation.
Yes. Volume.
We sold more open footwear in this quarter and lot of demand was there. So that's why these numbers are very high as compared to earlier quarters.
Okay. But would that be the case in the base quarter also?
Which quarter coming?
This current quarter, Q1 you are talking about?
No, I'm just saying when I compare Q4FY22, where you sold 4.2 crore pairs versus 5.2 crore pairs in this quarter, the mix would be similar, right? This point which,
Yes, this also, I think it will be sustained.
Mix is also similar. You're right.
Mix is similar.
Yeah.
So this growth, is it the channel was running low on Relaxo products given our pricing and now it is stabilized? Is that a function of that, or is it a lot of customer offtake also happening?
No, it is like what we lost market share in Q1, Q2, Q3. Now we are regaining that market share. So we are getting the space back at shelves,
Okay, shelf space. Okay. Yeah. And so the second point is you are also doing pricing parity earlier. So where are we in the journey now? How is pricing across channels for you now?
Now we are very competitive. That is why we are able to get the commercials.
Okay. And just one last one. If you could give, let's say for FY23 as a whole, just a broad brand-wise split between Sparx, Flite PU, Flite EVA and Relaxo.
Sparx is around 40%. Flite is around 38%. And rest is our Bahamas and Relaxo brand.
So Sparx 40, Flite is 28 and the rest is...
38. Flite is 38.
38. Okay. And how much would be Flite PU and EVA in that? 38?
60-40 something.
You can say 15-23 like that.
15-23. And just one last one in Sparx. Sorry, I didn't catch that number.
So you were asking now the split of EVA and PU. EVA was 15 and PU was 23.
Of the 38, the breakup we are telling.
Right. Just one last one. In Sparx, how much was closed in Sparx?
Total, close has been around 25%. In our total share of it.
45%. So,
I think the query is within Sparx you are asking.
Yeah, within Sparx. So let's say of this 2,800 crores you are saying Sparx is roughly 40% of sales. So roughly 11-20 crores. How much is closed in that?
So closed is 40, 60. 40% is closed and 60% is open in 1,000 crores.
In this 11, okay, so it's roughly 400 crores now.
Yeah, 400 to 450, yeah.
Okay, fine. Thank you so much.
Thank you. Next question comes from the line of Gurang Kakkad from Haitong Securities. Please go ahead.
Yeah, hi sir. Congrats on a good recovery in volumes as well as margins. I have two questions. Firstly, can you give the trend in terms of how the EVA prices are currently panning out? And what was the Q4 average pricing of EVA for you?
Now, EVA prices are stabilized. It was around 170. That is what, this is at what rate we consume. Although market may be at 160 only. This, the current, in the month of April, current quarter that is going on, it is around 160 rupees, 155 rupees. It keeps on changing a little bit here and there.
Okay. And last quarter in the base, this would be very high, right? Closer to 250, 300 rupees.
47.
Q4 FY22?
These are 250 rupees.
Okay.
Quarter one of this year, past year, 22-23.
Right. And currently the prices are stable at around 155, 160 rupees, which is what the Q4 average pricing was.
Correct.
Okay, fine. And secondly, on the EBO outlet strategy, so you have been at those 400 outlets for some time now, and it's heartening to see that there is some plans in terms of expanding that by around 15% this year. Now, is it that we've got the model right in terms of EBO and now we can target healthy margins in the business, or is it more so given that EBOs are largely Sparks brand focused, so we want to target aggressively and go aggressively on the Sparks brand? So what's the strategy out here?
Naturally, once we are having more efficiency in our stores, so we have started expanding this year. And we will continue the momentum the way things are.
Okay. So like every year you will have around 60-70 store expansion in the EBO going ahead?
We hope so.
Okay. And this high single digit margins largely is sustainable, or we can target to aim more closer to double digit or even a bit higher? Once it's fully scaled up and maybe 2-3 years down the line?
Yeah, naturally. Down the line, things will improve further. But we have to be always cautious, keeping in view competition, having a competitive pricing. So, but things will improve because when the sales improve, then efficiencies improve, overheads start getting low. So, ultimately, your bottom line improves.
Right. Yeah, that's it from me. Thank you.
Thank you. Next question comes on the line of Jasdeep Walia from Clockvine Capital. Please go ahead.
Hello. Good afternoon, sir. Can you hear me?
Yeah.
Sir, thanks for giving me this opportunity. So my first question is just a clarification on sales of Sparks brand in FY23. Now, last year you had said in FY22 fourth quarter call that Sparks is 37.5% of overall sales, which makes the sales of Sparks brand 1,000 crore in FY22. And this year in the opening comment you said it has grown 25%. So Sparks brand sales should be 1,250 crores this year. And in one of the conversation you had with one of the people who asked questions, you said Sparks brand sales is only 1,100 crores. So what is the correct number for sales of Sparks brand in FY23?
Sparks. No, we have not told you it's a 25% growth. From where you
25% growth, what we said was sports shoes,
Only sports shoes.
Not Sparks, it is sports shoes.
Sparks brand, it covers so many other things, sandal and open footwear also, SFG. That number was related to only shoe, closed footwear.
Okay. And so what has been the overall growth in Sparks brand in FY23?
Overall growth is around 10 to 12%.
13%. 13% is the overall growth. Sparks category. All put together, sandal, shoes, SFG, schoolmate, everything under the Sparks branding.
Got it. Got it. And sir, I'm assuming fourth quarter is an off-season for Sparks, right? So most of your sales in fourth quarter would be just open footwear sales, right?
Correct.
So fourth quarter is what percentage of overall sales of Sparks in a typical year?
If you did check the figure, 30% what? 35%, sorry.
35% in this quarter one. January, February, March.
Q4, sorry.
Q4. 35% we had.
So 35% of Q4 sales is Sparks brand?
Correct.
Yes.
Got it, sir. Got it. And sir, I have a query on your EBOs. So you mentioned that, competitors open more EBOs because they open EBOs only for their shoe brand. So why don't you do the same? Why don't you open only Sparks EBOs? So then you would have the same economics as your competition, right? Then the economics should be good.
Thanks for your suggestion. We'll consider it.
Got it. So in the current 400 EBOs, there are no Sparks branded EBOs, right? Only Sparks branded EBOs.
No, so far no.
Got it, sir. So my last question, sir, what is the composition of your exports? Is it only open footwear or is it Sparks brand?
No, actually it is more of open footwear. I will say around 60% of our international business comes from Hawaii.
Okay.
Open footwear, as you say, basic like Bahamas and basic Relaxo brands put together.
Got it, sir. Got it, sir. Thank you, sir. That's all from my side.
Thank you. Next question comes from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for giving me the opportunity, sir. So my first question is with regards to, the multiple price cuts over the last 2-3 quarters that we have seen. So has it led to some kind of, multiple price points at the distributor end? And could this possibly lead to a change in the down stocking or some kind of inventory level change at the distributor level?
You are correct. We had done multiple rounds of price cuts, so they had different types of MRPs, distributor and retailers. But now all of them have been cleared. It took 3 to 6 months to clear all the old MRP products. Now currently, as per demand, and we have the current prices available in the market, and there is no problem of stocking with the distributors. Currently, they are running short because of the season. There's a peak season.
Okay. And sir, that was my follow-up question actually. Because of these clearance of the old prices that you have taken in the channel over the past 3 to 6 months, so could there be a case wherein, because of this activity that you have taken in the past, the base for FY24 becomes weaker, and because of which we could see a higher volume growth for FY24 because of that?
Yes, you will definitely see that.
Okay, so would it be prudent to expect at least 15 to 20% kind of a volume growth for FY24 in that case?
We are targeting that currently. Yes, 15 to 20, double-digit growth in volume.
Okay, sure. And sir, my next question, is with regards to, again, on the pricing part, while we see, prior to the increase in the GST from 5% to 12% in products below 1,000, and even if we compare it versus the pre-GST era, I think the taxation on this segment is now higher. So how is it impacting demand at the lower end? And do you think there will be a permanent shift from some of these lower end footwear to maybe some high price footwear that you see in the future?
It's been 1 year, since that tax has gone up from 5 to 12, and market had adjusted to the new price structure of 12%. And now I think market is comfortable with the new pricing structure and GST structure, and we do not see any new player entering because of this or unorganized getting higher. We have taken the correction in prices and we have regained our shelf space.
Things are fairly stabilized now.
Okay. Sure. And sir, the third and the last question, is with regards to the overall the demand patterns that you see in this category. Because we are seeing a higher growth in the athleisure segment versus in terms of the open footwear. So what kind of strategy the company is doing apart from this Sparks brand that it is running? Is there any another sub-brand that the company is trying to experiment, to introduce more designs, or it will be only basically done through the Sparks brand itself?
No. Presently, no more brand. We are focusing on these brands, and accordingly, our price segmentation has taken place. So there is no plan of adding any new brand in the category.
Okay. And sir, in terms of the margin structure, if you see, there has been a lot of volatility in the margins over the last 3 years, if you see, because on peak levels, on an average, we have gone to 20% kind of EBITDA margins, and even in the bottom, we have touched 10% kind of EBITDA margins. So, as per you, what kind of margins are sustainable in the business model that you operate, which is largely a distributor-led model? So, what kind of margins should one build in a steady-state case for a business like Relaxo?
Currently we are, I think, aiming 15, 16 current we have margin. So that thing gets fairly stabilized, we remain competitive, and then back-end efficiencies may add further. Let us wait and see how the things pan out.
Yeah. So my question was more on, not on the near term, but more a broader and a long-term question, is this a business wherein, we can target EBITDA margins also near 20%? And the reason I'm asking this question is because, our is a business where we largely focus on price, where the customer is more price conscious. So if we try to take the margins a bit higher, is there a case where, you can attract more competition at that point, at that price points?
Well, definitely we have to be very cautious on this account. We should not just, in an ambition to raise EBITDA, and then we start losing market share. So, but we have to always watch all the conditions, all the market scenario, how is our efficiency level, then we have to improve back-end efficiencies and become more competitive. At the same time, EBITDA can also improve in that case. So, always you have to be agile and watchful of all those conditions to improve the things.
So if I summarize or understand it better, I think you will like to keep your margin in a tight range wherein you remain competitive versus the competitors, but at the same time also drive profitability for the business.
Yeah.
Sure, sir. Thank you, sir. That's all from me.
Thank you. Next question comes from the line of Sachit Trivedi from Trident Capital. Please go ahead.
Hi, can you hear me?
Yes, we can hear you.
Yeah.
Okay. Thank you for taking my question. My question is actually, I would say, my first point is almost a complaint, if you will. We are almost a $2.5 to $3 billion market cap company, but our engagement with the investors is extremely limited. I mean, we do an earnings call every other quarter, and any attempt to get in touch with the management is basically we don't even get a response. Could we improve this, please?
Yeah, we can consider this thing.
So basically, if I reach out, then at least will I get a response back?
Yeah.
Yes, you will get the response. We have IR agency also. You can touch them or you can touch our company secretary. So definitely they will respond.
Okay, fine. I will try again. My second question is, a few years ago, I had heard that you are the contract manufacturer for Nike shoes in India. Is that still true? And could you talk about that?
That was long back. It was more than 40 years back when we were doing the contract manufacturing for them.
Okay, fine. And then my final question is, in terms of price, margin, and I mean, we are told that, you can either fix the price or fix the margin. Which one of those do you fix? Or do you fix both and then work on the cost?
So we have to be mindful of both the things. We have to fix our margin also, and we have to aim for our market penetration and turnover also. Both the things we have to balance out, We can't just look at one thing.
Okay. All right. That's it for me. Thank you.
Thank you. Next question comes from the line of Akhil Parekh from Centrum Broking. Please go ahead.
Yeah. Thanks for the opportunity. Sir, just continuing on the previous participant's question, sir, how should we look at Relaxo, right? I mean, this pricing has been an issue for us in past as well. In FY 18-19, when one of the larger peers entered into our territory and started undercutting on prices, we couldn't increase our ASP. Like if I look at 17, 18 and 19, the ASPs were largely practiced at around 125 rupees. And in 23, again, we saw similar thing. So should we consider Relaxo as more of a volume plus operating leverage story and less of a branding story? Because it looks like despite being a large footwear brand, we do not hold the pricing powers. Is that understanding correct?
No. Last year it was a totally different scenario because of the raw material volatility. Not because of any brand problem. Because when the material that we got at 300 rupees and it falls to 150 rupees and local market was able to get it lower. So they got for some time some edge, competitive edge. But now things are stabilized.
That's correct, but we had to roll back the prices, right? At least in open footwear, which is 75% of our portfolio.
Because the cost of raw material difference was too much. That was the reason.
Okay. The second question is on the price infiltration by the wholesalers. We did get some feedback in the market. The wholesalers were kind of leading to some price infiltration for Relaxo, and we were taking some corrective actions in terms of installing software at the distributor level. Have any thoughts on it, and have we done the implementation of the IT part?
We have implemented DMS, distributor management system. Right now it is the second version. First version was implemented 3 years back, and the latest version 2.0 is out of 700 distributors, 650 distributors, we have implemented 100. So it is a continuous process. We are going to increase the implementation, and we are taking steps to control the infiltration, both infiltration by the distributors or wholesalers. It's a continuous process, it cannot stop. We have to really, by help of technology, control this.
But any timeline or deadline we have, like where we will be done with this complete installation across all 650 distributors?
So there is any question from Akhil or just?
Mr. Akhil Parekh, please go ahead with the question.
Yeah. So my question was on this deadline. What kind of a deadline we are planning to install this DMS 2.0 across all our 650 distributors?
This year end we'll complete this full implementation of DMS 2.2, and whatever complaints we get from distributor or wholesalers, we are taking appropriate actions for infiltration.
This should kind of create price parity for the wholesaler and the distributor, right? Because of this stuff.
Correct.
Okay. And last on the capacity and capex guidance, if you can, what capacity do we stand at, and for FY24, what kind of capex we are envisioning? That's all from me.
Capacity, we already have good capacity. So last year we have spent a lot of money on the capacity enhancement. So this year we don't have any big plan, but definitely routine capex, mold and some repairs and some infrastructure creation that will be there. But already we have good capacity to cater the demand of next 2 years at least.
So yes, in absolute term, like where do we stand in capacity?
Absolute term, we have a capacity of 10 lakh pair, and last year being a tough year, so that utilization was around 50-55%.
Sure.
At company level.
Okay, this is helpful, and the best wishes for coming forward. Thanks.
Thank you. Next question comes from the line of Prerna. Please go ahead.
Hi. So just wanted to understand the long-term vision. Where do we want to see ourselves in the closed footwear category, and in the next 5 years, how much should be the closed footwear as a percentage of revenue share?
I think we are thinking of having at least double-digit growth for the next 5 years. And overall share of shoe business will definitely increase because of the way we see things, growing use of athleisure. But it could be maybe 30% of share of shoes in our scheme of things. But otherwise also, other segments are also important and they are also growing.
Okay. So, sir, if we try to understand the demand scenario in both open and closed footwear, how would you see it, whether it is robust or it is very still muted? Some color on demand outlook that you are witnessing in different regions?
We have to keep our products relevant, competitive, and value for money to the customer. Then things will grow. Any category, if we become uncompetitive, demand becomes muted or it goes negative. So, whatever category we are going to be in, we have to be watchful of these things.
Okay, so currently you are saying that our price points are all in place to get double-digit growth.
Yes.
Okay. And so what will be your capacity utilization in the closed footwear category?
Can you repeat the question?
What will be your capacity utilization in the closed footwear capacity?
Around 60%.
Around 60%. Okay. Thank you, sir. I'll come back. All the best, sir.
Thank you. Next question comes from the line of Mithun Soni from GC Investments. Please go ahead.
Yeah, hello. I have a couple of questions. So you indicated we have 3 brands and there is a pricing pressure which we may face at the lower end of the price brand like Relaxo, the basic chappals. How would you say our pricing, we will have relatively we will have stronger pricing power in terms of to get the pricing from the customer for a brand like Sparks or for Hawaii or Bahamas?
No, because our brands are quite strong. Even the old brand like Relaxo is as old as 40 years old. But at the same time, we have to be mindful that market is competitive and our pricing has to be competitive. If we have to serve quality footwear at affordable price, then only you can sell large volumes of product.
Correct.
And that is what we are following.
So can you share, like, for the open footwear, what would be the realization for the, say, a slipper? For, like, how would you, for us, what would be the average realization for open footwear for Sparks versus for Relaxo, sir? Our realization.
No, you are comparing Sparks slippers with the Relaxo slippers. They are totally different technology, different things. You can't compare those slippers with this. But if you want to know the price, in Relaxo it will be around 100 rupees. 100 rupees. And Sparks around 450. No, only slippers. You want to know slippers in...
Yeah, only open footwear. Open footwear. The idea is that, what I'm trying to say is that it's a more aspirational product. So coming to the next question is that how do we see, like, Sparks is a much more aspirational product. So what is our now a plan for Sparks over the next 4 to 5 years? One of our participants also asked that we have 400 EBOs. Is there a possibility or a potential that we can rebrand those stores as a Spark stores and to really get the mileage for the Sparks as a brand?
No, our strategy is not only selling Sparks from those outlets. Our strategy is to showcase all our other articles also. Sparks is one of the categories. We may consider having only Sparks for few of the stores, not all, because we have to sell or showcase all our categories across, whether it is our Flight brand, Mohammed brand, Relaxo brand. So that's it.
Okay. And what is the plan for the Sparks as the entire Sparks? What is the sort of growth plan we are looking at?
No, these things are under discussion. When we will come out with it, you will automatically know. At the moment, we can't comment.
Okay, sir. Thank you.
Thank you. Next question comes from the line of Jasmine Surana from BT Capital. Please go ahead.
Hi, sir. Thank you so much for taking my question. I had a quick question on our e-commerce channels. What is the contribution we're getting from e-commerce channels? And the follow-up on that would be, what is our next strategy for D2C channels?
So currently we are having 11% contribution coming from online channels. And what is the second question?
Is there any specific strategy that we're looking at to scale it up, or what is the trend going to be like in the coming year?
Yes, like strategy, we are going to have new channel partners, or you can say the platforms. We are going to add new platforms. So currently we were with Myntra, Flipkart and Amazon. We're going to add Ajio and other Tata Click and other platforms also. So it's a continuous process of growing the market. We will be selling as brand sellers also on these platforms.
Okay. Thank you so much. And another question on the exporting countries. You said that you're exporting to the Gulf Oceanic countries, Africa and Central America. Would it be possible to get a number on the contribution from each of the countries that we're exporting to?
We're talking about country-wise, very difficult to right now, because we are exporting to more than 30 countries.
Okay. No, so the major ones that we're exporting to, would it be possible to get a number?
So, I can tell you the reason-wise.
Okay, sure.
Gulf would be around 30-35%. Then we have Central America would be around maybe around 5-6%. Then Africa would be around 35-40% again. Then we have Oceania, which is a major chunk. Rest of the business.
Okay. And so I just wanted to understand, since we've seen so much of volatility in the EVA prices in the last year, are there any plans for us to be hedged against those prices in the coming year or so? Because we saw the prices going down to 180, and as sir mentioned again, the prices have come back to 250, I believe. So is there any plan to be hedged against those?
No. Raw material prices are fairly stable. So things are quite stable, and there's nothing to worry at the moment. I don't know what is your concern.
Okay, sure. And I think that would be fine. Thank you so much, sir.
Oh.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Abhishek Gadve, an individual investor. Please go ahead. Mr. Abhishek, please go ahead with your question.
Hello, can you hear me now?
Yeah.
So I have a couple of questions. The first question is it safe to say that we have regained all our lost market share in the previous year and previous quarter, this quarter, or is it there is some still left to gain back from the unorganized sector?
Almost we have covered the loss what we occurred in Q1 and Q2. Almost, but still we have to gain back,
There is possibility.
So we can still expect it to go up.
Yes.
Right. Right. And my next question is on the EVA pricing, the EVA prices. Last time, in the last quarter, I remember when I asked this, there were around 200 per kg, I think, if I remember correctly. What are the prices looking right now, and do we expect them to fall even further going forward? And do we expect them to rise back to 200 levels, or do we see that there is stabilization now, at least for next couple of quarters?
No, it is now around 160. Sometimes we get at 155, so that's the way. In this range we are getting 150 to 160.
Right, and we don't see the prices having any volatile moves going forward. They're more or less stable now.
More or less stable.
Okay, thanks. And my last question is on the volume growth. What is the volume growth you are targeting for next year, FY24?
Double digit.
Right. When you say double digit, is it like lower teens, like around 11-12%, or high teens around?
It could be, depends upon the basic article. It could be around 15%. But then there are other article exports also, that also we have to see. Average out around, it could be double digit is minimum, but we aim to be higher.
Okay, so it's safe to assume 15%.
Yeah.
Okay. Yeah. Thank you so much, and all the best.
Thank you. Next question comes from the line of Ankit Kedia from Phillip Capital. Please go ahead.
So government is, from 1st of July talking of introducing BIS in footwear. A lot of your competition is from unorganized market, which impacted your demand now. So with BIS being implementing from 1st of July, how do you see unorganized markets play? And do you think market share regain for organized players like you will be higher in open footwear? While imports could also be tough in the sports footwear category from 1st of July, there could be inventory disruptions for importers. And in Sparks also, we could see some market share gains.
For the time being, this quality control standard specifications have been laid out. And there is a possibility that this date is going to be extended because even government is not ready. And meanwhile, a lot of clarification are required from our side, and we have raised the queries to BIS. So accordingly, but we are internally, whatever quality specification they have laid down, whatever it is in the making, we are already meeting those standards. So nothing to worry.
So I agree, nothing to worry, but will you gain share because your competitors might not be ready and you might be ready? So it will be beneficial for you. Do you think if those standards are laid out immediately and you can gain share?
No, because there is a small exemption for micro and small. That means the companies whose turnover is up to 50 crore, there will be exemption. So they will have their still space in the market.
Understood. Thank you so much, sir.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you all for joining the call. This is all from our side. Looking forward to joining you again. Thank you very much. Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.